Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on CMG SKX NKE, and we're adding Twitter here to the list. And just a reminder, this is the resident bear list. That doesn't mean we're bearish on the shorter term time frame. Everything is about time frame, and we are looking at more longer term weekly charts and swing plays here. And we've been watching CMG on this list every single day, doing a video for over the past 8 months because it's a very clear lower high, lower low pattern. Obviously on the daily chart, the bulls have been very strong the past 3 days, but if you look at the weekly, it is a very clear lower high, lower low pattern. So we're adding Twitter to the list. I'll get to that at the end and discuss why. So for CMG, the bulls showed up and we now have a couple higher lows, and we did break that resistance of 396.45, so there's a higher high. And we're looking at the overall weekly longer term trend to see if this is going to break for the bulls, and if it does, we will flip right to playing it bullish. Now keep in mind that the market is at all-time highs, and you don't want to be playing these bear names with a very strong market. So when the market is hitting new all-time highs like it is now, this is when we're watching these charts, keeping an eye on them, writing down key resistance levels, and if we see the market begin to consolidate, that's when we look to these names. So the bulls in control on CMG. We've got the 100-day moving average resistance right at this $400 psychological level. Upper Bollinger Band is right there as well. And the level for the bulls to change this trend, you can see that weekly middle Bollinger Band resistance is right above 400 as well. But I'm looking at this level right up here, 419.30. Every single bounce attempt has resulted in a lower high forever, it seems like. And that's the level to break for the bulls to see some higher lows and higher highs and to turn this trend around. So that's a very key level going forward. If we reject at any point below 419.30, it's just another lower high. So that's the level that we're going to be watching over the next couple of weeks. If we see weakness at that resistance, we will look for what I call a top fishing play, where we make a bearish entry with our key resistance, 419.30. And if the bulls break that level, we know to exit the bearish trade, and then we can even flip over to going bullish. SKX rejecting from the middle Bollinger Band daily resistance after some fairly weak bounce. We still have this gap to fill down at 23.09. I'm looking down at support of 24.68 and 23.96. The high of this bounce right now is 25.67 resistance. So we know if the bulls break 25.67, they are showing some strength, but we are looking for some further pullback with the close near the low of the day. And as long as this middle Bollinger Band daily resistance is rejecting the price, we will have our eyes set on that gap fill to the downside. The weekly time frame was looking nice. The bulls held exponential support, got a bull break of the inside candlestick on the weekly, but an indecision doji to end the week with an upper wick showing some profit taking. So keeping an eye out for that gap and for some further pullback. NKE bulls had a breakout, and a higher low, higher high pattern has been underway for the past 2 months. We're now breaking out on the daily time frame. A nice bull break of the inside candlestick on Friday. As soon as 53.10 broke, that was a bull signal. We're above the upper Bollinger Band, and more importantly on the weekly, we have this middle Bollinger Band as support after multiple rejections in the past month. So the bulls are looking good here for short-term upside, and again, look at the overall downtrend chart, and we can even draw this resistance. So while the daily chart is in full-on breakout mode, we're still very clearly a bear on the weekly time frame, and we would put our downtrend resistance line right about there, hitting the lower highs. So the bulls, step number one, they have to break this level. Step number two, they have to break the lower high pattern, which would put us at this resistance level is right here at $59.95. So essentially $60 psychological resistance. NKE is another one. We've been doing a video every single day on NKE for, let's see, it's been about 8 months there as well. So lower high, lower low, long-term pattern, but bulls in control. I would be looking for a target here. Look at this downtrend resistance line lining up with the 50-week and the 100-week moving averages. So about $55 to $56 can be a target on this bounce, which is still a few percent to the upside. We can see previous price resistance, $55.91, $55.78. So previous price, moving averages, and downtrend resistance all falling between 55 and 56. So we know the market is bullish. We back off as a bear. We scout our resistances, and we wait for the stars to align. And what I mean by that is if we see the market consolidate right when SPY starts to hit that resistance, or I should say right when Nike starts to hit that resistance, then that's going to be a recipe for a nice rejection and a bearish entry point. So this is just something we're going to be scouting, putting it on the back burner, and keeping an eye on it. So Twitter, same thing in terms of the short-term bullish action. We're on the verge of a bull MACD cross. We've got an oversold bounce underway, but we're scouting for a bearish entry. And that's because all daily moving averages are resistance. We have a gap up here to be watching at 1832. And the signal here for the bounce was a nice bullish reversal. Actually, we didn't even get that third gap down open, but the very clearly oversold. The RSI hit right off 30. Little bounce attempt, higher low, and then the higher high. As soon as we broke 1673, that was the higher high, and the bulls have seen some nice follow through from there. So the daily chart shows some nice bullish action, even though that is a bearish reversal candlestick on Friday. We'll see if that gets confirmed, but why I like this chart as a longer term bear is obviously Twitter has been in one heck of a downtrend over the past couple years. We did get a nice bounce with all that rumor action going on. We need to be aware as bears that if a buyout were to ever occur, that would be a position to trap, or a situation that would trap shorts. But we've been hearing these buyout rumors time and time again. Something to be aware of, but at this point, wouldn't avoid a bearish play just because of the possibility there. So we have our clear high of this bounce attempt. We had a gap down. Bulls got up to 1984. So I'm going to be watching that resistance level. I'm going to be scouting for a bearish entry with a lower high compared to that level. We did form a little bit of a base of support, 1628. And although we dipped below that level, we never closed the week below 1628. So that is a support line. So if I were drawing here on this chart, I would draw a downtrend distance line hitting that lower high, and then I would draw a horizontal support line right where we found that support. So that is the pattern I would be watching on Twitter, and I would be scouting a bearish entry with this downtrend resistance line lining up with that middle Bollinger Band weekly resistance, which is currently 1864 and just beginning to descend now. So keeping an eye on this pattern for Twitter, going to save that chart. And again, just these are plays on the back burner. We're playing bullish right now. Friday was a really nice bull day. If all days were as easy as Friday was, we'd all be millionaires. But we're watching and waiting for some weakness. That's what we've got here heading into Monday, January 9th. I appreciate you watching. See you soon.